All right, Friday afternoon. It is October 22nd, 2021. We made it through another week.
We
Here we
did.
are.
What a week. What a week. You're looking
Well,
sharp. You get a crisp new haircut?
oh, Ben, I got all my haircut, every last one of them. I believe our French clients would call it a nice couped cheveux, as they call it. You know what I'm saying? Working
You're
on my
saving
dad.
that one, eh? All
Eh,
day.
yeah, working on my dad jokes. My kids hate them. Okay,
Yeah. Yes.
let's. Well, they hate them. I think they secretly love them. Anyway, I digress. How's your week been?
Pretty fast. Went by super fast.
Yep,
Yeah.
busy. Hey,
Busy.
between crypto soaring and Trump launching his media company, I don't know
Quite the
what to
week, eh?
say. Yeah,
Meme stocks are making a comeback.
I know. It's best not to watch if you don't like that type of thing.
Jeez.
So yeah, let's get started. Give us an update. What happened this week in the world?
Yeah, since you talk about Trump there, for anyone that's not following along, what's going on there? He's de-SPACed, or they're a SPAC, Digital World Acquisition Corp, investing in Trump's new media conglomerate. The stock was $9.87 a couple of days ago. It touched a high of $175 today.
Yep.
So we do a little bit of quick math on that as a big number.
Mm-hmm.
1,000+% of
It
return in
is.
2 days.
It is over 1,000%.
Yes.
Did you buy? Do we go heavy on that in the portfolios or no?
Yeah, full allocation, 100% allocation.
Definitely not. That's a joke.
Yeah. No, so the meme stocks definitely got a hold of that. Like it went to 175 and then closed at $94, which is still up 10x from a couple of days ago. But certainly that'll be interesting to watch. So for anyone that thinks that nobody cares about Trump, people still care about Trump. And so that is grabbed the attention of the meme stock world.
It's best if you don't make comments like that, man.
Political comments.
I know. Okay, well, that's what's happening this week. It's not, it's not insignificant.
Yeah, I mean the big news was really from a crypto perspective was the U.S. launched their first Bitcoin ETF, ProShares, BITO was the ticker symbol. And so we talked about this last week. We said, Gensler and the SEC is finally going to approve this, and looks like you went ahead and did it. ProShares did that. There's a couple of others that have filed and will likely launch at some point. But the reason why it matters is for the first time in the US, you're able to buy it in your 401k and your IRA. And so, there's trillion plus of assets that presently don't have any exposure to it. If we look at to where these companies have been making their allocations, you put a 1% allocation into the portfolio, for example, that's a significant amount of interest that could go into it. And so it's a big deal. People may kind of think that it doesn't mean anything, but it's a big deal that there's some individual buyers that have the chance to buy it when they wouldn't have historically.
Yep.
Yeah.
And the market reacted because we hit all-time highs. Bitcoin hit all-time highs.
Yep.
Ethereum all-time highs.
So Ethereum all-time highs as well, briefly yesterday.
Yep.
We've peeled off since then for both Bitcoin and Ethereum. But yeah, certainly all-time highs in both those categories.
Yeah, great.
Yeah.
Okay, well, what did you get up to this week as far as the portfolios are concerned?
So as we continue to sit around that center of the quads, I would say, as we talk about, everything's kind of jammed in the middle right now, where you get not a lot of movement in one direction or the other. I didn't make a lot of material changes this week. Just a few tinkers here. Had reduced some exposure to financials a little bit, some profit taking, but generally staying with the current allocations. And so I didn't make a lot of dramatic changes there. I'd had some initial inklings to think about unloading exposure to gold, and I did a little bit of a reduction about 3 weeks ago, but I've actually stayed with it. And gold had a pretty good week this week as well. So that's interesting. And there's been a lot of attention between gold versus crypto as the kind of the alternatives they're playing off against each other. I think that as we look at how the summer played out, gold should have had a really good run and it didn't. And now as we head into the kind of the next phase of the regime, I'd say that maybe gold actually does a little bit better than it should have, given the setup we had earlier this year. And so I'll talk a little bit about that in one of the charts that I have when we go through that as well.
Gotcha.
Yeah.
Okay, just before we go on there, as always, feel free to leave a question, comment, concern, raise your hand. If you want to do audio, hit the Q&A button in the bottom. If you don't see them, you just got to hover over them. They all kind of appear. Put it in the chat or the Q&A. We love getting questions, man.
We do.
Gives us something to react to. Yeah,
that's
a little interaction, a little engagement.
Yep.
Oh, here's an announcement, Ben. I didn't even tell you this. All of our videos have hit over 3,000 views since we started them. Yeah, on our YouTube channel. So if you haven't seen any of those interviews, we launched one this week with Donnie Connor on insurance. Wow, that sounds like a real snoozer, eh? No, but it's not.
Yes.
Because we talked about all kinds of interesting insurance, right? Director insurance, cyber insurance, which I thought was super interesting, right? Things you never even think of that you don't need to get insured, and ransom insurance.
Yes.
And he gave us all kinds of firsthand examples of what you would need those for. So that's live on the YouTube channel now. So if you just go to YouTube and type in Hard Investment Group, you'll find all of our videos in there.
Yep.
Okay, shameless plug. And you want to jump right into the charts?
Let's do it.
All right, cool.
Yeah. So every week I got one client that gives me a hard time at the difficulty I have at launching the charts. So let's see if I can do it right.
Yeah, but I didn't want to say anything, but it is a bit slow.
A little bit slow and a little bit sloppy. So trying to get my speed and my understanding, and that I can make this happen.
This chart looks like you drew it yourself with your blue Crayola there on your desk.
I did.
Hey, I guess it would be black. It's anyway, whatever. All right, what do we got here?
Yeah, so I guess as I've been thinking about jobs, there's been a lot of attention towards jobs, and one of the things that I've said for years is I think that technology is inherently deflationary, and so as we look at this, and the Fed and most central banks really focus on jobs, and this might be a bit of a stretch, but when you look at it, it's the service jobs or the small business jobs that are hard to fill right now. And I don't know if you followed kind of the news around these kind of virtual kitchens that are having everywhere in the world. White Castle announced today that they're doing that they're putting a robot in to see if they can flip burgers. I'm not sure if you saw this.
I did see that.
Yeah. And so Wild Wings as well is testing where a robot actually fries the wings. They're doing testing to see if they can have robots do that and increase their efficiency and time. So, I think there is a kind of a bit of a transition that's happening, obviously sped up by the pandemic, but also sped up by the fact that people were getting paid to stay home. And so you've seen technology advance really quickly because you've had small business say, how do we adapt to this? How do we change? And how do we make sure we can still make money from this? And so, I think that some of the statistics like this one might not be as strong as the central planners might feel, that there's so many jobs still to be filled. Well, people aren't going to take these jobs likely. So I think this is going to be an ongoing challenge, and it's for small business to adapt to one of the challenges that they face right now.
Mm-hmm. Yeah, I've often wondered that now, though. Like, what are people they're just not going to get jobs anymore? I mean, or just not in those areas. I mean, it's interesting because eventually, the subsidies will dry up, right?
So I think some of that comes back to the fact that the job force is changing dramatically, and some of the
Yeah.
jobs that existed in the past probably don't exist in the future. So I think
Yeah.
that some of the jobs will come back for service, and some people will go back to that. But I,
Yeah.
I think it's forever changed in a lot of places.
For sure.
Yeah.
Okay. What do you got next?
So next one.
Dazzle
So
us, Ben. Dazzle us.
this is the bang chart. So
Oh.
Barrick, Agnico, and Newmont and Goldcorp. So there's been, as I talk a little bit about gold, this is a kind of a historical look at these companies. This I had taken from the Felder report. Jesse Felder, super interesting guy, puts out a lot of free content, good research. And a few years back, before gold and gold companies took off, he compared kind of the FANGs, which are the Facebook, Apple, Netflix, Google, to the bangs here. And he's come around to the point again. We're saying, look at the ratio between these two businesses, or these two sectors, and these kind of two company, we'll say ETFs, is super dramatic again. And maybe it makes sense to consider kind of long gold miner, short technology, FANGs, that is. So interesting thing to pay attention to. I think over the next 6 to 12 months, he's right. Over the next 3 to 12 weeks, I'm not sure, but it's certainly something to pay attention to. The financials in the mining companies have never looked this good. I was looking at a mining company this week that trades at like 7-8 times earnings, which we've never seen. So it's certainly something to pay attention to here.
Amazing.
Mm-hmm.
Good
Mm-hmm.
one, Ben.
Mm-hmm.
Nice one.
Mm-hmm.
I don't know if I'm dazzled, but yeah, I'm
Not
interested.
dazzled. You might
Not
be
dazzled.
dazzled by this one. You might be dazzled by this one.
Okay.
I'm
Here we go.
pointing over here because it's beside me on the other screen.
Okay.
But so this is more of a technical one, and sometimes I'm trying to just vary it to make sure you guys kind of have a sense of my thinking around. There's many different inputs you take into account when you're making decisions. This is more of a longer term type technology decision, and this a lot of people are triggered by ARC and Kathy, and this is purely a technical look at ARC. And when you're looking at the technicals on this, you're seeing a kind of this wedge pattern, which you may have heard some technicians talk about. And historically, a wedge pattern occurs when something's consolidating. And so if you strip out the name or the ticker symbol and just look kind of purely at a wedge pattern, it looks like you've seen a massive amount of consolidation. And likely what happens out of this kind of pattern typically is you get an explosive move to the upside on it if you're looking at just the pure technical side of things. And so this is ARKK, which is Kathy Wood's the flagship ETF. Which is kind of the technology Web 3.0 view that she has, really kind of forming that wedge pattern. Does it break out? Does it not? We'll see. But it caught my attention when I saw this chart this week.
Well, you did it. You dazzled me.
That does. I thought you'd like that one.
I do like that one.
Yeah,
Definitely dazzled.
Yes. Yes.
I like how you built this week. Like you started kind of with the average one and then interesting and then dazzled on the end. Really finished strong. Good for you.
That's it.
Good. Okay. Did you have one more?
Yeah, no more charts. No more
No more
charts. Just
charts?
I wanted to hit on a couple more pieces there.
Oh yeah. Okay.
Yeah.
Ben's chart segment that concludes Ben's chart segment. If I get that out. Any questions? No questions yet. If you do, please let us know as we finish up here. What are you seeing for the week coming?
Yeah, so I think I'd mentioned earlier this week that we'd seen, as we led up in the last couple of weeks, I've said, the market was positioned pretty defensively up until kind of early this week. And it looks like the market kind of positioning long shorts, put calls, looks pretty pretty neutral positioning right now. So I'd expect to see how we break from this point. Because there's a lot of focus around the middle of the economic piece right now, not really doing too much, just saying, let's just stay patient and see what happens and see what the likely outcome is. But right now the market's positioned pretty neutral. So you don't necessarily want to have defense. You don't want to have too much offense. So pretty neutral. So it's a patience. Let's wait and see what the market brings us next week.
Gotcha.
Yeah.
Okay. Did you have anything you wanted to finish with? Or are we pretty much done?
Yeah, so a couple of points. Still, the equity market raise is still pretty healthy. We've seen a number of companies come to market again this week. Minto, for obviously people from Ottawa would recognize that name. They raised some money yesterday. High Gold. There's a couple other preferreds, Power and Great-West Life did some preferred issuance. So still quite a bit of liquidity there in the market, and those issues are coming to market, and some IPOs that we haven't seen happen in Canada in a little while. So that continues to be healthy. The last point that I mentioned in the email was just about the US Central Bank officially saying that a Fed chair members aren't allowed to own stocks anymore in the future. And so they've officially come out with this statement that I guess that gives Rosengren and Kaplan and Powell, I guess, a pass on the past 6 months. So they've come out and said you officially can't own stocks if you're in that voting position anymore. So that's a news, I suppose, which should have happened 25 years ago, but happened today. That they're trying to make the rules and regulations better for them.
Okay.
Yeah.
Yeah, that one was surprising. We actually covered that in our podcast video, which
Yes.
is also on our YouTube channel.
Yes.
Which we also just rolled. It's called the what do we call it? Central Bank Scandal.
That's right.
Episode 20.
Yes.
Okay. I think that's it, man.
Yeah. Okay.
Let's pack it in
That's good. Yeah.
for the week.
That's it.
Nice
Excellent.
little cap off to the week. Okay. That's it.
So that's it. Next week, last week of October, which is end of fiscal year for the banks as well. So that'll be wrapping up end of the week next week.
All right. Well, that should make for an interesting week.
For
Okay,
sure.
everybody. We'll see you next week.
Take care.